Hello traders and welcome to another video review. Today is Thursday, January 15th, 2022. Let's start with the Forex calendar review. During the London session, we have data from the Italy and the Eurozone. Eurozone will release ECB economic bulletin at 10 o'clock, and Italy will release industrial production data at 10 o'clock as well. At 10:30, United Kingdom will release a credit conditions survey based on the Bank of England data, and that's about it. If we talk about the London session, not too many data scheduled for release during that period of time, but during the New York session we have a PPI, core PPI, unemployment claim and continuing claims data scheduled for release at 2:30. At 2 o'clock we have the FOMC member Patrick Hacker speech, and at 4 o'clock we got the FOMC member Lyle Brainard speech. So that's about the speeches. Until 7 o'clock FOMC member Charles Evans will give a speech as well. So not too many data scheduled for release. However, unemployment claims, continuing claims and producer price index data are definitely something to keep an eye on, because they look kind of interesting for today. So because there's plenty of data to release during the US session, let's take a look at US dollar. The US dollar index at the daily time frame chart has broken out of this short-term channel, and as you can see is now back inside the main channel, approaching 61% of the last wave up. This level is at the 94.65, and as you can see the recent very nice uptrend is now being of course corrected. The momentum is clearly negative, is around the level of 35, so it's very close to the level of 30, which means extremely oversold market conditions. However, before these market conditions will be reached, the market needs to test the 61% of the Fibonacci retracement, and then there is of course some technical support very close to that level, 94.47 and 94.27. This is the key short-term technical support for bulls, because as you can see, let me just move some lines. There you go. Because as you can see, the next support is at 93.42 and 93.25. So please keep an eye on 61%. This one is now not actually needed, the 38% of the Fibonacci retracement, so we can just remove it from our chart. 50% as well, it was violated, so we don't need it anymore. 95.24 will now act as a local technical resistance, and of course the key level of resistance is 95.50. So this is the current situation on the US dollar index, bearish movement to the downside in form of the corrective decline. So what is the euro dollar doing then? Let's take a look. The euro dollar is breaking higher, is breaking above the key short-term technical resistance 1.1422, and it's heading towards the game changer. It's heading towards the level of 1.1501, 1.1531. As you can see right now, we are breaking out of this nice channel that we've been trading inside, with occasional ups and downs or false breakouts since the this is the 26th of the May 2021. So that's a pretty long channel, over a half year, 7 months to be exact. And right now, today, we are breaking out of this channel with strong upside momentum, 62 points on the momentum. So please keep an eye on the current developments on the euro dollar, because if we break above the game changing level 1.1501 and then above 1.1531, then the next target for bulls is 1.1662, 1.1703. and this is definitely something to keep an eye on, because it means the multi-year long-term technical support at 1.1167, 1.1153 has been defended, and this means that bulls might start to first bounce or do the corrective pullback to the upside, and then if the corrective pullback will be strong enough, and if bulls will break above the game-changing level, then might start even deeper retracement, deeper correction to the upside, or even an uptrend. So euro dollar is going up, US dollar index is going down. What is related to these two markets? S&P 500 index. Let's take a look. The S&P 500 index is not doing that much recently, is still inside of this multi-year upward channel, and the uptrend is still being intact. The recent high was made here at the level of, let's say, 4,817. We have, of course, some sort of a decline here. Last week we got this decline. However, it didn't actually moved below the middle line of the channel. This is the low, this is higher low, this is higher low, and it looks like a hammer. So the bulls are still in charge of this market as long as this level here, the low of 4,493 and 4,488 is violated. Then we can say, okay, maybe there will be some deeper pullback. However, nothing like this happened yet, and that recent correction is still in range with the last corrections as well. Let me just take a look. This will be like 5%, 4.83%, 4.83. There you go. That's a typical correction for the S&P 500 index. So US dollar index going down, euro dollar going up, S&P 500 doesn't actually reacted, and for this situation, what is gold doing then? It's connected with the US dollar, and as you can see, the US gold nominated with the US dollar, of course, spot gold market is bouncing up. It's bouncing up towards 61% of the Fibonacci retracement. Again, this level has been tested once, twice, and now it's about to be tested for the third time. 1,829, 61% of the Fibonacci retracement, 1,833 technical resistance, 1,848 technical resistance, 1,876 is the local swing high. So please keep an eye on this current development. We might have a counter-intuitive move of the gold market above the 61%. However, if that zone between 1,823, 1,833 with the 61% Fibonacci retracement level inside will hold the bullish pressure, then we might see sell-off below 1,780 and then below 1,760, which will be the second leg of this downtrend initiated here. So that would be, in that situation, the scenario would be like this. We start from here, that's the leg A, that would be somehow wave B, and we are waiting for the wave C to the downside, right? So this is the current pattern, the downside pattern. However, any violation of this zone, a sustained breakout or something like this, will give us a first indication that the wave B might not be developing correctly, and the ABC correction was made here. So please keep an eye on this zone. As long as this zone is not violated, this scenario is valid. So let's take a look at Bitcoin, of course. And the Bitcoin is slowly breaking out from this channel. Bitcoin made a hammer candlestick here on the 10th of the January, and if we zoom in, we can see breakout from the local descending channel. The next target is 45,429, very nice target. And then of course the highs that were made in the December 2021, the highs just before the Christmas holidays. So please keep an eye on the Bitcoin. If we break above 45,429, we can very fast get towards 51,846. That's a very important level. That's the first important level, and the next important level, game changer, 53,228, of course. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.